Remember when every new crypto coin was being hyped as the next Bitcoin, and people believed it could give them 1,000 times returns almost overnight? Back in 2017, during the eco boom, projects with nothing more than a white paper and a flashy website were raising millions of dollars in minutes. People were throwing money at coins they knew nothing about because everyone around them was getting rich. And for some, it worked. Stories spread about early buyers turning a few $100s into hundreds of thousands. That created the belief that crypto was a magic money machine. Then came the 2020 to 2021 bull run. Social media hype, TikTok videos, Elon Musk tweets, and suddenly meme coins like Dogecoin and Shiba Inu exploded. SafeMoon, Baby Doge, Floki Inu. The list goes on. Many of these coins had no real utility, but people didn't care. The dream of 1000x was alive again. If you just picked the right meme at the right time, you could retire. That feeling of easy money defined crypto culture for years. But today, things look different. Those easy lottery-style wins are not the norm anymore. The market has matured, and while there will always be random coins that pump, the overall environment has changed. The Wild West days are over. People are smarter, regulators are watching, and exchanges are more careful. It's not so easy to throw money at a random token and expect life-changing returns. Regulation is one of the biggest reasons. For years, governments didn't know how to handle crypto. Was it money? Was it a commodity? Was it a security? That grey area allowed projects to launch freely, but it also allowed scams, rug pulls, and massive fraud. Now, that era is ending. In the United States, the SEC and the CFTC are cracking down. In Europe, the MiCA regulation is reshaping the market. In Asia, countries like Singapore and Japan have strict licensing requirements. KYC is now required almost everywhere. Taxes have to be reported. Stablecoins are being treated more like digital dollars with banking-style oversight. On one hand, this makes crypto safer and more trustworthy. On the other hand, it kills some of the extreme speculation. Without risk, there is less chance of insane rewards. Another major change is the rise of institutions. A decade ago, crypto was for tech nerds, libertarians, and retail investors hoping for a moonshot. Today, we have Bitcoin ETFs. We have hedge funds and pension funds buying Bitcoin. We have banks offering custody services. Big money has entered the space, and big money changes the rules. Institutions are not buying Dogecoin because of a meme. They are not chasing 1000x. They are looking for predictable, steady returns. They treat crypto the same way they treat stocks, bonds, or gold. That gives crypto legitimacy, but it also takes away the chaos and fun that made it exciting for retail investors. Think about it. In 2017, you might have bought a coin because a friend told you it was going to pump. In 2021, you might have bought a meme coin because it was trending on Twitter. Today, the biggest buyers are institutions quietly allocating billions into Bitcoin and Ethereum. That shift in who is driving the market explains why the explosive gains are gone. But this doesn't mean crypto is boring. Far from it. Bitcoin is still unique, a decentralized, scarce digital asset that no government can inflate. Ethereum continues to power decentralized finance, NFTs, and thousands of smart contract applications. Stablecoins have become essential in countries with weak currencies, letting people move money faster and cheaper than banks. And new areas like tokenizing real-world assets, such as real estate, stocks, or commodities, are pushing crypto into mainstream finance. The innovation is still there, but the focus is shifting from speculation to real-world utility, and that's the big difference. 5 years ago, the question was, what coin will 1000 times? Today, the better question is, what project will survive, scale, and actually provide value? Investors are starting to look at fundamentals, adoption, and technology instead of hype alone. That's a healthier approach, but it also feels less exciting. The chaos is fading, and with it, the dream of overnight riches. Of course, not everyone sees this as a bad thing. For the industry to grow, it needs stability, it needs trust, it needs to be boring sometimes. If crypto is ever going to replace parts of the banking system or become a serious global asset class, then it can't be run like a casino forever. Regulation and institutions may take away the 1000x dreams, but they also create a foundation for long-term adoption. Still, we can't ignore what drew so many people in to begin with. The thrill of possibly striking it rich, the idea that a small investment could turn into millions. That energy made crypto different from stocks or gold. And in some ways, that energy is what's missing now. Regulation makes it safer, but also less thrilling. Institutions make it more respected, but also more controlled. It's like when your favorite underground band goes mainstream. It's bigger, but it's not the same. And we also can't forget the crashes and scandals that shaped this shift. Think about Mt. Gox in 2014, when hundreds of thousands of bitcoins vanished. Or the Terra Luna collapse in 2022, which wiped out tens of billions in a matter of days. Or the FTX implosion, where one of the biggest exchanges turned out to be a house of cards. Each of these disasters shook trust in the industry and made regulators step in harder. They also changed how investors behave. In the past, people ignored risk because the upside was so tempting. Today, the memory of those collapses makes investors more cautious, and that caution means fewer people are chasing wild bets. The industry had to learn these painful lessons, and they are a big reason why the dream of 1000 times is fading. So where does that leave us today? If you're investing in crypto now, you need to adjust your mindset. Bitcoin is unlikely to 1000 times again, but it could still be one of the best performing assets over the long term. Ethereum might not make you a millionaire overnight, but it could power the financial apps of the future. Stablecoins might not get you rich, but they're already helping millions of people escape inflation and move money instantly across borders. The opportunities are still there, but they're different. Crypto growing up might actually be exactly what the space needs. Fewer scams, fewer rug pulls, less chaos, more trust, more adoption, more real-world use cases. But at the same time, we have to admit the industry has lost some of its magic. The 1000x dream is gone, and with it, a lot of the excitement that fueled earlier bull runs. So what do you think? Is crypto better off now that it's becoming more stable and regulated, or do you miss the chaos and the dream of quick riches? Let us know in the comments, and don't forget to subscribe if you want to see more videos like this.